Well, hi traders, Chris from the research team here at Pepperstone. Now, I want to quickly announce that Blake and myself will be taking a short 2-week break from the trade-off. Blake's going on a lad's trip and I'll be going out to Dubai the following week. But in the interim, I just want to leave a short message, a bit of a tidbit about what I'm seeing on the markets, because I think it's really important, the message that we're seeing from gold, silver and crypto, and also to an extent the equity market. And that message currently isn't being shared so much by the bond market. But if we were to see that message being shared by the bond market, I think it could have quite powerful ramifications for global markets and volatility more broadly. Now, the move we have seen in gold, silver and crypto, or certainly in the precious metal complex since the 20th of August, has been prolific. It's just been a one-way ripping trend. We've seen Bitcoin trade up to 126,000, just above that level, and gold's traded to 39.76, up about nearly 20% since that 20th of August spike, swing low that we've been seeing. And silver just getting shy of $49, up about 32% in that ripping move that we've been seeing. Now, what is the message that these classic debasement hedges have been trying to say? I think what we're seeing there is really about the fiscal position that they're looking at. Now, the fiscal situation in the US has improved this year, but if we look at the future, we've got loosest financial conditions in the US that we've seen in probably since about 2002, if we look at it on a broad basis. And we can also see in this situation that the Federal Reserve are actually cutting into those loose financial conditions, which people are talking about bubbles, but the Fed are actually cutting and easing into that situation, which is a very different dynamic. Now, the other factor is we're looking at is that the IEEPA tariffs, which go into the court ruling, the Supreme Court makes a judgment call on whether or not they're deemed illegal. If the court does decide that they are illegal, I think that could throw huge volatility into financial markets in a time when everyone is very, very short of volatility. We've seen that in where implied volatility is on a cross-asset basis, or where implied volatility is very rock bottom levels. And therefore, if you were to get that, I think it could cause a huge shock. People wouldn't be able to price risk around that. And people would be asking, what does this mean for tariffs, which has been Trump's major bargaining card? And what does it mean for the deficit going forward? Then we go into the US government shutdown about what this means for the one big beautiful bill, because the Republicans are talking about after the midterms, trying to put in place about $1 trillion of healthcare related savings and cuts coming through. And you've therefore got a deficit projection which could go up towards 8% of GDP. And I think that's the message that the gold market and the silver market and crypto is saying. We see this right now, that there's fiscal largesse, recklessness, the deficit projections are going up. And I think they're sniffing out higher growth, higher inflation. And I think those debasement hedges, or that loss of confidence in money, is what the gold market's saying. Now, for me, that's fine. Equity likes that. But it's when the bond market doesn't see that's the situation. If the bond market starts to share that message that gold and silver and crypto is suggesting, the long end of the curve starts to rise, term premium starts to rise, I think that's the situation that could be quite a negative. Trade at Pepperstone.